Hey everyone, welcome back. If you're an investor looking to break into the fix and flip game, or maybe even just scale your deals, you already know that the biggest hurdle isn't always the finding the right property, it's getting the financing. The banks want to slam the door, private lenders ask you for crazy terms, and sometimes it feels like the money's just locked up in a vault and you don't have the key to it. But don't worry, today I'm going to give you that key. In this video, I'm going to break down 5 strategies you can use to actually secure financing for your fix and flips. And stick with me, because by the end, you'll know how to position yourself as the kind of borrowers lenders actually want to work with. But before we dive in, hit all those buttons, like, subscribe, and drop me a comment below if you've ever been frustrated trying to get a loan approved. All right, so let's jump right in. So why traditional financing doesn't work for fix and flips? So most investors hit a wall at the bank. The banks don't like risk, period. Fix and flips are short-term, unpredictable, and often involve properties that need major work before they're even livable. So that's a nightmare for traditional underwriters. I can tell you that. They don't want to see that. They want long-term stability. They want W-2 income that can be traced for decades. They don't want 6 months of dust and drywall and contractors. So if you've ever been denied by a bank, don't take it personally. It's not you. It's the nature of the business. So once you accept that, you can shift your focus to lenders who actually understand the fix and flip game. That mindset shifts saves you time, frustration, opens the door to better options. The role of a hard money lender is that these people are who care less about your tax returns and more about the deal itself. They're looking at today's value, your rehab plan, and what the property will be worth once it's fixed. The best part is they move fast. We're talking days, not weeks. And when you're competing against other investors, speed can make or break that deal. Yes, the rates are higher, but think of hard money like a tool in your toolbox. You're not marrying it, you're using it to seize the opportunity, then you're moving on. So if you want to stay competitive, especially in hot markets, hard money is often the only way to actually win the deals. Building credibility with your lenders. Now, here's the catch. Just because hard money lenders are flexible, it doesn't mean that they're reckless. So you need to build your credibility. That means showing up with with a clear plan, your purchase price, your rehab budget, your timeline, your after repair value, backed up by comps. And if you flipped before, showing proof, you have to highlight your team, your contractors, your realtors, your project managers, anyone who adds strength to your plan. The lenders want to see that you're prepared and professional. Remember, they're taking a risk on you, and the more confident they are in your ability to execute, the more likely they'll fund your deal quickly and keep funding your deals in the future. That's the important part. So creative financing options besides hard money. Here's something a lot of new investors miss. Hard money isn't the only option. You can get creative. So for example, you can use private investors, you can use families or friends or wealthy contacts you might know. They might lend for that return that beats the stock market. You can partner with other investors to pool your resources. Some lenders even offer hybrid loans that cover both acquisition and rehab, so you're not juggling multiple sources. It's called the fix and flip loan. And you don't forget, business credit lines or home equity lines. Combining strategies lowers your risk and keeps costs down and makes sure you're never stuck with just one lender saying no. So the pros who survive in this business aren't the ones with the deepest pockets. They're the ones with the most flexible financing strategies. So you have to position yourself for long-term success. Well, all right, last but not least, long-term success, getting one deal financed is great, but the real goal is building relationships so lenders see you as a repeat partner. Deliver on what you promise, finish on time, pay back early, and when possible, keep communication clear. Do that, and lenders will not only loosen their requirements, but they'll offer you better terms, bigger loans, and even bring you opportunities. At that point, you're not chasing the money's chasing you. And that's when your fix and flip business really starts to scale. So there you have it. That's why banks won't play ball, how hard money lenders work, and how to build trust, creative financing options, and how to secure long-term success in the fix and flip game. Financing might seem hard to get, but for investors who prepare and position themselves the right way, it's always within reach. If you got value from this, hit that like button, share this video with other investors, and drop a comment telling me your biggest challenge. So when it comes to financing and flips, I'd love to hear from you. So don't forget to subscribe for more strategies to grow your real estate investing business. And don't forget to visit smartandloans.com for more micro niches.